Hello and welcome to the Invest with Rules Friday market update. It's February 28th, the last day of February. Scott Bennett and Mike Olafson. Mike, how you doing on this Friday?
I am good, Scott. TGIF.
Yeah, it's been a harder week in the market. I'm going to start with the concept just kind of globally. Do you have a plan? And are you implementing your plan? I think that's really big as rule followers of the market of trying our hardest to grow and really right now protect capital. We're going to talk a lot about the moves we made, how we've done it. Before we do, world's quickest disclosure, this is just information, not a direct solicitation to go buy or sell anything. Please always do your due diligence, manage your risk tolerance, manage your plan. So making sure you have a plan. We're going to talk about our plan and what we've been doing and why we've been doing it. Mike, before we jump in, let's talk a little bit about the stock market score over maybe the last week to 2 weeks, what we've done. Why don't you kick us off and I'll chime in?
Yeah, so as you can see in this graphic, we have gone literally in a week from a score of 9 to 5.5. So what a difference a week makes. In fact, if you go back, if we showed the previous week, you'll see that our percent exposure went from roughly 94% 2 weeks ago to, yeah, about 89% a week ago to now down to the 50s. So it kind of shows the rapid, let's call it decay of what's going on in the market. And Scott, if you wouldn't mind commenting a bit more on that, please.
Yeah, and I think this is what trend following is what trend following is. It's listening to the market. The market is telling us there's pressure. We'll show some slides later of I wasn't shocked at all that much about NVIDIA. Um, I don't have the crystal ball, and honestly, no one does. They're a great company with great products that are heavily in demand, but we live in a capitalistic world where you not only need to keep up with the pace of growth, but the whole market was expecting a beat. The whole market was expecting a beat and a raise. The question is comes down to margins and when on earth is that a very high margin Blackwell new chip coming out? And the answer is not this quarter. So then the market threw that up yesterday, and we're really we're kind of hunkering down. Is trend following? We'll look at some charts and some thesis, but could this get worse? And if it does get worse, what's your plan? Could this be another one of the many V-shaped recoveries? That's another thesis too. But we've definitely hunkered down is one thing I would say. So our risk has gone from like the left lane of the highway driving fast. I would say that we're actually went from the middle lane and we're probably like almost heading towards the right lane of the highway already. And if
Yep.
we look at a chart of the IVV or the S&P 500, there is this really important support area from last August, and this is a chart from FinViz. And the reason we like showing some of these, and at some point we'll kind of bring back our trend roadmap charts. I just think it's just we all like to look at kind of just very simplistic charts, but this is done by a computer, which I like versus done by chart eye. But you'll see that we broke, and when we broke, very simply, we added hedges. This goes for the S&P and for the tech stocks, which we'll show you a little bit later on some charts. The small caps were worse, but it was hard to get into some of that just due to the timing of everything. So you had your kind of potential top in December, January, and then February you made a little bit of a breakout and we started kind of de-risking quickly. So you are in a short-term downtrend. It's calendar day 4 in a long-term uptrend still. So we still have a full position on the S&P, but underneath the hood, which we'll look at, a lot of damage happened. Now, here's the thing I'm going to turn back to you, Mike, is everyone on Twitter or X, everyone on CNBC, Fox Business, wherever you go, they don't know. That's the beauty. So if we're looking at evidence, is all we're simply doing is we're looking at evidence, and the evidence of the stock market health score is from, like, let's say, it went from a 10 to a 9 to an 8 to a 7 to a 5. That tells us not exactly mirror the 5.5 from an exposure standpoint, but are you offsides? Think on that sports analogy. Are you way too like are you frozen right now and you're just got hit super hard in growth stocks? Or are you in cash and you look back over the past 2.5 years and you're like, oh my goodness, I just left a ton of money on the table. So in general, the way I just want to share with you at the bottom right now where my mouse is, this is a weekly relative strength index. We like to look at relative strength. We like to look at momentum. And very simply, we just broke below a support area for the S&P onto its previous price and itself. So very simply, there is a statistical likelihood, there's a probability, there's always a percentage that you could fall back down even further. Could you maybe get that bounce back up to the underbelly of the trend and then do the proverbial throw up? It's possible. Obviously, the market is greatly disliking the fact that now you have slowing inflation. You saw those PCE numbers, the consumption expenditures, they pulled in. Let's say inflation is going to be potentially over the next couple of months ticking average and down. Now it's all about growth. And if you have a bunch of tariffs coming on board, that could hit growth. If you are firing a ton of employees in the government sector, that is going to hit growth. So, very simply, could this be a little different than your garden variety buy the dip the last 2 years? There's a possibility of that. So, Mike, before I get into this fun little chart of how bad the throw up has been so far, any comments on these two charts I showed?
Well, just to go back to the last part of your point there, Scott. When was the last time we talked to a client in our advisory service who wasn't concerned and wondering what's going on and nervous about essentially what's going on now and going into the future? It's been quite a while, and I think that's very telling to your last point.
Yeah. And I would say so we're going to talk about the fear in the market and very simply again this was the 27th so yesterday this is off of X and Charlie sharing that the gold is just barely off of highs. We have a full position which may simply get moved to a half position. The S&P is off about 5%, hiding most of the damage and most of that's hiding because of one of our positions Meta, which is holding up really well. We don't own Apple, but Apple's down almost double digits. We do own Amazon. It's a half position. Google, there's NVDA. That's 22% off of its recent high. Pretty wild. Bitcoin, which we no longer own. Palantir, Coinbase, Tesla. I mean, holy smokes, right? Tesla's up 40% from its 52-week high. MicroStrategy, which is Michael Saylor's company who pretty much takes his whole balance sheet and buys Bitcoin. Again, kind of fun. I have no concept of some of this stuff, but Dogecoin, Trump Media, that's an actual ticker, T whatever Donald Trump's ticker, Trump coin, fart coin, Melania coin. Mike, how are you doing scooping up these fart coins on the bottom here?
I think my puppy dog has got a the corner on Farcoin. You know, it's just I I got to be honest, Scott. I didn't know Farcoin existed till seeing this, but that's just crazy. The bottom line, I think, kind of stepping away from the ridiculousness of what's kind of in the bottom of this chart. You look at what's going on. This tells you what's going on below the surface, which is, I think, a bit different from what we've seen in other market pullbacks. So we'll see what happens.
Yeah, I'm going to share some additional. This was from two other really quality people off of the Twitter sphere or the X sphere. And very simply on the left-hand side, it's a very busy chart. And the AAII, it's like the American Association of Independent Investors, they survey them and tell them, say, how do you feel? Are you bullish? Are you bearish? And we're at this extreme. So then you say, okay, well, is this an extreme that would be a bounce? This is where the market would hold. And this is, you're at a negative 40. So a lot of people are bearish. Back to our clientele, a lot of people are feeling bearish. If you go back over here to 20, like 2009 time frame, if you go back to the 90, so this is, you're at kind of extremes. And then you have Brian Shannon who shares that when you do get to these extremes, this dark blue line, you actually get a little bit more throw up. You get a little bit more of a market kind of puke before, even though you're in the extreme fear category, the lever goes a little bit lower. And the other thing that I would share that some of these like indicators are imperfect, is what I would say. The other thing that is interesting is that the VIX, the volatility of the S&P 500, actually hasn't spiked at all. Like, I know it sounds nuts, but even though we've hedged a little bit, almost no one has. And the market has barely fallen. So now, from an index standpoint, but underneath the surface, you're seeing 10 to 20 to 30 to 40 to Tesla is like it's no longer a trillion-dollar company. You're seeing NVIDIA almost sink somewhere near that $3 trillion level and possibly lower. So it's an interesting time where even though you're getting these indicators that is this the low, you don't know. So the market strength gauge helps us to determine over the past roughly 14 days what's been going on underneath the surface. And it's staples, real estate, healthcare, international financials. It's things that are interest rate sensitive. So think bonds are back. We have a position and interest rates are going down and the price of bonds are going up. And when interest rates are going down, you're getting a reprieve in these safety sectors like staples and real estate and healthcare. And we have still our position in financials. And what's been getting kicked really hard is places where Tesla is located, like discretionary. We're out of small caps. That was it could get a lot worse. So this could get a lot worse, and I just want to make sure that you have a plan. So underneath the surface again, Eli Lilly, some of the financials. I mean, Warren Buffett's got more cash than ever. You now have NVIDIA on a break. You now have Microsoft and the Googles. I'm going to share a fun story, and then I'll turn to Mike. I think I've shared this a few times, but this was like back during Christmas time. If my mother-in-law, if my sister-in-law, and if my barber are talking about NVIDIA, party over. I
Hmm.
it's sad, but I hate to say it is like the 10x. It's not going to be another 10x right away. It's just highly unlikely. There's a million of these stories. But Mike, what is this telling you? How are you feeling?
Well, point blank, NVIDIA, the fact that it's now on a break, and by the way, this is the second time it's gone on a break. And what does the break mean, to be specific? That means that it's on both a short-term and long-term downtrend. What does the long-term downtrend mean? That's pretty significant because if you look at a chart of NVIDIA, it's basically saying that over roughly the past year, it's now starting to trend down. Second time in about a month. It hit a break about a month ago. So will it recover and come back out of break? Possibly, but we just don't know, which is why we follow our rules.
And you're going to see the billion-dollar fund manager rank of NVIDIA. It's been sinking, 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 sinking. It's probably going to
Yeah,
possibly even fall off the list. So
yeah.
let's talk about what we're watching from fund buying, from earnings growth, from the trend, volatility adjusted momentum. This is what the watch list is as of this morning on Friday. So you're seeing insurance stocks, which we own, full disclosure, holding up nicely. Actually looking really nice. We'll look at a chart. Spotify hasn't been kicked too hard. We talked about real estate. There's a bunch of aerospace companies that are seeing some life, like Howmet and GE's aerospace company, and then financials. You have Bank of New York Mellon almost unscathed, and you have XLF, which we have a position. Let's just simply look at a chart of the NASDAQ really quick. This is again FinViz on top, our signals on the bottom. You are in a short-term downtrend day four within a long-term uptrend. Again, I'd be more concerned if you had like a double downtrend, but you're seeing pressure and you're seeing this hopefully area hold around 500. We were kind of applied our hedges right under here. And again, it would be nice if it were to hold. Hopefully, if it could it bounce and then roll over, or could it just simply sink down? This is Finvis's 200-day moving average. That could easily happen. I'm going to keep rolling. And if you have any comments, Mike, this is the inverse
Yep.
of that. You can kind of see how this is non-leveraged. This is like the reciprocal version of the tech stocks. It is now on an overheat, but we did add our position right in here at 37 and change. And it's in a short-term uptrend within a long-term downtrend. And at some point, our model will kind of maybe at some point it will trigger a if it's still like this, it'll stay on overheat. But at some point, it won't roll back to a U-turn. It will roll to a gas signal. So obviously, you can kind of see could one have hit this one perfect? Sure, but that would have been like right at the peak. But in general, PSQ, we have a position. SH, the inverse of the S&P 500, we have a position. So I hope it doesn't happen, but could the market roll over from here? These will go a whole lot higher. Any comments?
No, I think you hit it. Yeah, let's keep moving on because I think the more charts we look at, the more it will tell the story.
Yeah, so the strongest of the global international stocks is VEU. That's all world ex US. Short-term uptrend, long-term uptrend still. Would like to see it hold, but it's again, everything is somewhat correlated. But could it still show some muster and kind of make its way up and out? It's still possible. We still have our position. We're watching that one closely. We did add a position despite the torture of the market, and this is something that's just acting totally nicely. IAK insurance stocks, short-term uptrend, long-term uptrend, making a run for highs. So that has been productive. XLF has not folded like the market. That's the financial sector. Short-term uptrend, long-term uptrend, looking perfectly fine, consolidating sideways. I'd like to see it definitely hold underneath kind of 4 days ago. That was a tougher day, and everything is doing okay today. IHI is close to our trailing stop. So we did add a position. We're up in the position single digits, but we just don't want to see it fully roll over and lose our gains. So could we take a single digit gain and walk away? That's something on our radar. Medical devices, short-term downtrend, if that holds the rest of today, long-term
Yeah,
uptrend, my thoughts there.
yeah. Just super quick, Scott. Just want to point out that members may say, "Well, you've got a full position on IHI, and if we end up selling it out and closing it today, why not just only close out half?" And that's to do with where we are in the position. We're only up single digits, low single digits, as you said. And in this type of market, with the current signal going to coast, the best bet is likely to go ahead and take our full position down, take our small gain, and move on into cash. So that kind of now on the flip side, if we were up, say, 20% and was a road tripper, different story. We want to try to let that winner run, and we might just take it down by half versus all.
Yeah, think BSX versus IHI.
Yeah,
It's a
yeah.
component in the basket. We have a sizable gain. Amazon is on the ropes, half position. It was a road tripper. We have like a double digit gain. This isn't fun. Amazon is a bellwether, but they're in a basket. They're in the S&P, they're in the Nasdaq, they're in discretionary. They're even though they've almost fully caught up to Walmart. Doesn't matter. You're in the basket, you get hit. So when you're in the basket and the market's good, all boats lift. But when you're in the basket and all boats are sinking, you get hit too. So Amazon, we're watching that one very closely. Axon, same thing. Obviously, you think like if you're a police officer, again, thank you for any people who do that role and do that job. We're so grateful. But they're going to need body cams and they're going to need them rolling because the last thing they need is a lawsuit saying you did this, but that never happened. And these rolling body cams need software and cloud. And let's say that there is an emergency and someone calls 911. In theory, in the future, whether it's happening now or in the future, they're going to need a drone to go to the scene of the crime to tell respondents what to do. That's the future, and Axon is that key to the future. And we were very much watching our risk. This is not a pretty looking chart. When we got in, it was gorgeous. So we're at a half position. We're watching it closely. This is a company that although could have this really rough base right now, but that's why we want to hold these billion-dollar fund manager stocks, these half positions as long as we can, because this is the future. This is where the world is moving from a defense. And I know that the government might not be outlaying as much capital, but if you run a warehouse, think Walmart or Amazon, that's where they're moving next is to provide security and tech for protecting their whole warehouse systems. That's where the world is moving, and they need faster, better software. Viking Holdings is our only last item to report in March. Obviously, people are still cruising. So it's still holding its trend line. Any comments on any of these stocks I just ripped through?
Well, Axon, I think your points about Axon are really cool, and especially when in day and age of limited resources, emergency services going more into drone use makes a ton of sense, and Axon being there on the cutting edge of that is great. On Viking, we are down to a half position. and we are going to watch closely going into earnings. But if it breaks down before earnings, we will be out. If it doesn't, we will hold into earnings. That's our process.
Yeah, I mean these we are in a longer term relationship with an Axon. If this was a new position, we'd be gone. For
Yeah. Oh
anyone
yeah.
in our advisory that didn't have a big gain, we're gone. That's you can't sit through that. That's nuts. So again, we date companies. We would love to be with a cushion of gains. We would love to do the Warren Buffett dance, just sit through or rip through and just you can sit through bases if you have big gains. But if you don't, that's scary stuff. So. The Billion Dollar Fund Manager Report, the Big Fund 50, is coming to an end in February. Most likely at some point over the weekend, we will get the new data. Obviously, after months like these, usually the next month or two tends to be pretty fruitful. So we'll be on the lookout for what the changes are going to be, who's the winners. Even during when the market stinks, there's always some really high quality names. So I would keep some of these on your radar because they're probably going to, most likely, some of these guys at the top will stick around and probably in most cases improve from a rank perspective. And some of the ones that are kicked in the shins will probably be exited. And again, we're pretty light in our exposure, but definitely keep that around. Like obviously we talked about real estate. There's Welltower. So if you're looking for these, like where is the strength? If you're looking for like healthcare, it's Gilead. I know they're on overheat today. It's Doximity. If you're looking for that aerospace, like what's going on there, this is the cream of the crop, and it could easily, the funds are, they supported this guy. They supported this during a very, very difficult month. So keep your eye on that, and so will we. I'm going to stop here for final comments. Hope you have a really nice weekend. Try your hardest to stay away from the screens. We'll send you hopefully that report at some point. World's case longest is Monday. That depends on how we get the data. But just to really sit back and maybe think on your dog walk, your just instead of thinking like stress, because the market causes stress or it causes euphoria. They'll say fear and greed, but really thinking about your process and think about your plan. Do you have a plan? And are you implementing your plan? Or are you at the very top, you'll see like a frozen block of ice. The last thing you want to do is be a frozen block of ice and be down 45% in Tesla. And I hope it goes back up. I really do. I hope it goes back up quick for everyone's sake. But do you have a plan to at least minimize risk? We want to thank you for being a member of Invest with Rules. If you have questions, hello@investwithrules.com. If you have a kind of a topic for future videos, if you're like, I'm a frozen block of ice, just email us hello@IWR Advisors. It's a totally separate business. We do fiduciary financial planning. We do a very similar version of our process. We're not perfect, but if this market gets ugly, we will absolutely implement a plan to protect your capital. In a choppy market, we're all choppy. When the market's in a beautiful uptrend, that's great. When the market falls out of bed and does awful, we will protect capital. We will move to cash. We will get to the right-hand lane of the highway as we've been doing. And I hope it bounces, but if it doesn't, we have a plan. Mike, final words.
Yeah, I'll just double down on what you said. Even though it may not seem like it sometimes, we're human as well, and we have the same anxieties and fears, et cetera, et cetera. But bottom line is what keeps us grounded is the fact that we've got our plan and we stick to it. And at the end of the day, at end of even very rough days, you sit back and say, we followed our plan, we executed, made it happen, and we're taking action, covering ourselves, protecting ourselves.
Yeah. All right. Enjoy your weekend. Enjoy your Friday. Thank you so much for being a member, being a part of our community. This is where we kind of gather together. We look at the data, the math, the truth of what's going on, and we take action. We follow our rules. Again,
Yep.
thank you for being a member.
Thank you.
I hope this helped you kind of identify some either uptrends or things coming to uptrends, but please always do your due diligence, manage your risk tolerance. This is not a direct solicitation, just things for your watch list. I hope it was helpful, and I'll see you at investwithrules.com. Thanks so much.